So let us start the topic income from other source. This is the last head of income. It is very small head, and today itself we will wind up income from other source. Basically under this head, logically, all the incomes will be included which are not covered under earlier four heads. The income which is not covered under salary, house property, PGBP or capital gain is by default covered under section 56. And that section 56 is charging section of income from other sources. Section 15 is the charging section of salary. Section 22 is the charging section of house property. Section 28 covers PGBP. Section 45 covers capital gain. And similarly, section 56 covers income from other sources. So to be taxable under the head income from other sources, first of all, income must be as per the provisions of section 56. Now under section 56, there are two subsections. One subsection simply says one thing which I have just said, that any income which is not covered under earlier four heads is by default covered under income from other sources. It is a residuary provision. But within section 56, we have another section, another subsection which says that some of the incomes are always treated as income from other sources, like dividend income. It is always income from other sources. So I'm not saying whenever I get any dividend income, I will not say that since this dividend income is not covered under earlier four heads, it is other sources. No, I will say that dividend is by default income from other sources because Act says it. Winning from lotteries, Act says that it is income from other sources. Amount forfeited by the assessee in case of transfer of capital asset. If you remember the provisions of capital gain, in some cases, if I forfeit the amount, because when I made the agreement to sell the property to other party, I received some advance money, and since the person didn't pay me the balance amount, I forfeited the amount. This forfeited amount is by default taxable under income from other sources. We have discussed this in capital gain also. So there are around 10 to 12 such incomes which are always income from other sources. So under section 56, we will cover two different subtopics. Some are specific income. Specific income means always income from other sources. And another is residuary income. That means where any income is not covered under earlier four heads, then it is taxable as income from other sources. Please raise your hand if little bit of this section 56 is clear. So before proceeding further, let me share with you the website of the tax department, and then let me share with you how we will study income and this income from other source. So only section 56, 57, 58, 59, only in these four sections entire income from other sources is covered. As I have given you a brief introduction of section 56, that it simply tells you which incomes are taxable under the head income from other sources. 57 tells me the deductions, that when I include some income, which expenses I can deduct. Section 58 tells you amount which you cannot deduct. It is just like section 40 of PGBP, where some sections like 40 clause A, 40 clause B, 40 capital A, these sections were explaining in PGBP amount which is not allowed. Similarly, under section 58, there are some expenses which will never be allowed to be deducted while computing income from other sources. And then last, profit chargeable to tax. It is a theoretical section which I will discuss with you very briefly. Let me click on section 56 first. I hope the font size is comfortable. Now this is section 56. 56 income from other sources. 56 subsection 1. I told you in 56 we will study two different subsections. One talks about residuary and second talks about specific. This is residuary. Income of every kind which is not to be excluded from the total income shall be chargeable to tax under the head income from other sources if it is not chargeable to income tax under any of the heads specified in section 14 items A to E. Basically these are earlier four heads. Any income which is not taxed under earlier four heads under section 56 subsection 1, it has to be taxed under income from other sources. You cannot say that your income will go untaxed. So this 56 subsection 1 is a provision which takes care of this point, that someone doesn't have the option to say that no, my income is not at all covered under any of the other heads, so I will not pay any tax. No, you have section 56 subsection 1 where you have to include that income. And some are specific income, section 56 subsection 2. In particular, and without prejudice to the generality of the provisions of subsection 1, the following incomes shall be chargeable to income tax under the head income from other sources, namely. Now this is specific. It tells you by name that this income is always income from other source. I gave you a simple example of dividend. Similarly, there are other examples given. One condition also comes in different cases, that income by way of interest on securities if the income is not chargeable to tax under the head PGBP. Similarly, income from machinery, plant, etc. if the income is not chargeable to tax under PGBP. Then letting out of machinery, plant if the income is not charged under the head PGBP. Then some income if the income is not charged under the head PGBP or under the head salaries, etc. etc. So in specific incomes which are taxable under the head income from other sources, within these specific incomes there are some incomes which can also be covered under other heads. They can be covered. Some of those incomes, specific incomes, can be covered under PGBP also. So when you read those names of specific incomes, Act is using the language that if the income is not charged under PGBP, then you write it here. If such income is charged under PGBP, then don't write under income from other sources. So at so many items, item number, it is basically clause 1, dividend, clause 1A. So it is given in the form of section 2, clause 24, subclause 8, section 2, clause 24, subclause 9, section 2, clause 24, subclause 10. And if you see in front of this income, it is what? If the income is not charged under PGBP. So in front of so many items, you will find this line. If the income is not charged under PGBP, if the income is not charged under PGBP, if the income is not charged under PGBP. In this case, if the income is not charged under PGBP or salary, then only you come here. So you will not be able to learn all these things by way of section clauses. So I will simplify now. So you should note down only those points which I will tell you now. So this is basically section 56. So it's very lengthy. If you can see, it's very lengthy. Many things are there, but it's a lengthy section. Now let me simplify these points for you. I hope you got the basic idea that what we will study now. We are basically studying the theory for the time being, that which incomes are other sources and which are not. That's it. So the points which I will tell you, you should note down only those points. Charging section. So first point, section 56. It tells you the incomes which are always income from other sources. In this there are two subtypes, 56 subsection 1 and 56 subsection 2. 56 subsection 1 says that all incomes which are not covered under earlier four heads is by default covered under section 56 subsection. That means that income which is not covered under earlier four heads is income from other source. 56.2. It is telling you specific incomes. By names, Act defines some incomes as always income from other sources. So what are those incomes? Dividend income, that you should write now. Dividend. Then winning from lotteries. Crossword puzzle. Etc. Then I don't know if you remember this point or not. When I was discussing PGBP, I discussed section 36, where by name some expenses are allowed as expenditures. In that I discussed one example where when employees give something to the employer as their contribution towards PF, when I give something to my employer with the instruction that please deposit this PF in my account, and if this employer fails to deposit, if the employer fails to deposit this PF with that Provident Fund Authority within the due date of filing return, then what happens? Do you remember? Then what happens? Then this amount will become the income of the employer under section 2 clause 24 subclause 10. I hope that you don't remember it. I have strong apprehension that you don't remember it. So you need to revise the provisions of PGB. But there was such point that if as an employee I give something from my salary to my employer with the instruction that please deposit this PF in my account which is with that authority, and if employer doesn't deposit that amount till due date of furnishing return of income, so that amount which I have given will become the income of the employer. Unnecessarily that will become the income of the employer, because sooner or later that employer has to deposit the amount with the authority. So the same point is that one which I will write now in C. Amount received by the employer from employees as their contribution. Whose contribution? Employees' contribution. As their contribution towards PF. Any fund, towards any fund. It was their contribution towards any fund. So if such amount is not taxable under PGBP, then it will become taxable under other sources. So in the same example, suppose this is the employer X Limited. X Limited failed to deposit my Provident Fund amount in with the Provident Fund Authority. So this will become X Limited's PGBP. It will become X Limited PGBP. So that amount will be taxable as PGBP income of X Limited. But if that income is not under PGBP, then it does not mean that it will go untaxed in the hands of the employer. Then employer will include that income under other sources. That's it. So either first priority is that it should be PGBP. If because of some reason it is not covered under PGBP, then employer cannot say that now I will not add it anywhere. The act says that no, then you include it as income from other sources. Is the point a little bit clear? If yes, please raise your hands. For this, you need to remember the provision of PGBP. Only then you can relate it. Next point. Interest on securities. Securities are debentures, bonds, etc. These are securities. Government also issues security. Private companies are also issuing securities. Securities is nothing but a loan basically, where you give some amount and you get interest. So that is known as security. Interest on securities. So if it is your business to invest in securities, it becomes a PGBP income for me. And for me, as a teacher, this investment in security is not my business. So I will include it as income from others. So it depends upon the assessee. If income earning is a part of your business, it becomes PGBP. If not a regular business transaction, it becomes other sources. So interest on security, and the same line is written if such interest is not taxable as PGBP. Then other relevant points are income from let out of machine. Suppose I have given some machinery on rent. Income from let out of machine, plant or furniture. Suppose this let out is my business, so it becomes PGBP income. This rental income becomes PGBP income. If it is not my business, it becomes my other sources. So same language. If such rental income, every rent is not covered under a house property. To be taxed under rental, to tax rental income from house property, it must be a land or building. It is machinery, plant or furniture. If such rental income is not taxable under PGBP. So these points you should learn. Otherwise, something will become very technical for you. Sum received under keyman insurance policy. Keymen are basically those people in the management who are very relevant, who are having important position in the company. Who are those persons? If these people do not stay in the company would be in a heavy loss. It is what normally the meaning of key man, main people who are running the business basically. So insurance is so many times taken for the life of those people. If something happens, so some amount will be received. So that amount received is also taxable as income from other sources if such amount is not taxable as PGBP or as salaries. The point is amount will go taxed. It can be under the head PGBP, it can be under the head salary, or it can be under the head this other sources. So it depends on so many conditions. The next point you should write is amount forfeited, that you must be aware of. Amount forfeited by the assessee. references in case of capital gain. In case of capital gain forfeiture. If you remember the point of amount forfeited, in that example also I have shown you that if you forfeit the amount, it will be taxed as income from other sources. So the same amount is basically written in section 56 subsection 2. Then interest on compensation, amount
So
received as, yes.
so shouldn't that be from the year 2014, 2015?
Yeah, of course. But there is no need to write this with effect from this year, because basically when we study income tax, we assume that current year provisions are followed. Otherwise, it will become very difficult, because in every section, etc., there are some dates. Some provisions might be applicable from today. Some provisions might have been applicable since 1991. So what we assume normally, if we are not writing anything, that these are applicable for our year. Clear?
Yes, sir.
Interest on compensation or interest on enhanced compensation. Suppose anything is compulsorily acquired by the government, so they award compensation. Along with the compensation, they sometimes give you interest also because of delay in the compensation. So that interest part only is other source. Then gift received, always income from other sources. Gift received from the employer is salary. Gift received from any person other than the employer is always income from other sources. That's it. This is our first point of discussion in other sources, section 56 subsection 1 and section 56 subsection 2. Please raise your hand if you have noted down so that I can proceed. Okay, next. Has everyone noted down? If yes, please raise your hand. Okay, next point. Dividend. Next point is dividend. So now I'm telling you some points, some incomes of other sources which are relevant. So let me make it a second heading. Some incomes which are covered under the head and which are those incomes which are relevant. There can be lakhs and crores of income under the head other sources, because every income which is not covered under salary, HP, PGBP, capital is by default covered here. So every income is not written in the act, but there are some special incomes. Why I am saying special? Not because these are having special tax rates. These are special because these are common. Many people must be earning this income. So some incomes are those which are, some incomes which are called are explained below. So these are those incomes which most people must be using this income, like dividend. Crores of people must be having this dividend income. So first is dividend. Now what is dividend? Anything which is distributed out of profits of the company to the shareholders is dividend. So that is actual dividend. But under section 2 clause 22, subclause A, B, C, D, E, there are 5 different types of those distribution of profits indirectly in such a way that though these are not actually dividend, but when you go deeply into these provisions, you will find that these are nothing but a way to distribute profit in a different way. so that people cannot misuse the provision. That is why we have section 2 clause 22 subclause A, B, C, D, E. Under these 5 subclauses, different type of things are written. And though that is not in our course, study of these in detail is not in our course, but in all these 5, indirectly, distribution of profits happens. So government simply says that when you distribute profit to the shareholders, it's nothing but dividend. In actual, you directly distribute. You say that, yeah, we are giving dividend of 100 rupees per share. But in these 222 A, B, C, D, you never say as a company that we are giving profits, we are giving or we are distributing profits to the shareholder. Indirectly, what they say, like, let me give you a small example. They will issue bonus redeemable preference shares. For example, let me give you an example. Bonus redeemable preference shares are issued. If I say redeemable, that means after some time these will be redeemed. Can you tell me what entry I will pass when I will issue bonus redeemable preference share as a company? What entry I will pass? What journal entry I will pass? Any answer? When someone issues shares, what entry you pass? When you issue share, what entry you pass?
Shareholder account debit to share capital account credit.
Okay, for example, to share capital. But now I'm saying that I'm giving bonus. Can you tell me what I will debit now?
Sir, reserves.
Yes, reserve or P&L, that's it. Because you will not get anything. So this is what you debit. So when you distribute actual dividend, what happens basically? You debit your P&L account. And you say to cash. Here what I'm debiting reserves. These are basically general reserve or free reserves. But I'm not debiting cash. So this is a way to manipulate. It could have been the way to manipulate. It could have been the way to manipulate. Companies could have said that we are not distributing any dividend. We are only issuing share capital. But since these are redeemable, do you know after some years what will happen? When these will be redeemed, what entry will be passed? Share capital debit to what? When these will be redeemed, what will be to? To what? When you redeem, what you give as a company?
Cash.
Cash.
Cash, of course. And when you merge this, what happens indirectly? Nothing but P&L debit to cash. So same thing is happening when you actually distribute dividend. But now it is happening after some gap of years. After a gap of some year, it is nothing but section 2 clause 22 subclause A, where it is mentioned that when you release company's asset, that's it. When you release company's asset by way of profit, it's nothing but dividend. It is what section 222A. I hope you got a little bit idea that what I wanted to convey. Detail is not in our course, but I wanted to tell you that what 2 clause 22 subclause, these 5 clauses cover. Directly covers those distribution of profits which ultimately results in distribution of profit to the shareholders. Please raise your hand if the point is clear. Only to give you an idea that what actually happens in section 2 clause 22. Indirectly, it's nothing but dividend. Not directly, indirectly. Okay. Now next point. Now what is the treatment of dividend? My purpose is not to tell you entries, but what is the treatment of dividend? Till last year what was happening? Do you remember till last year what was happening? Till assessment year. Till 2021 what was happening? Can you tell me till 2021 what was happening?
Dividend distribution tax.
Yeah, there was corporate dividend distribution tax. CDT, we were calling it as CDT. We were calling it as CDT, corporate dividend tax, which was imposed on the companies declaring dividend. It was imposed on the companies which were declaring dividend. Okay, and these companies were domestic companies, not non-domestic. So domestic companies in under Income Tax Act, we have, for the purpose of taxation of dividend, we call some companies as domestic and some are non-domestic. Every Indian company by default is domestic, but in some cases even some foreign companies can become what? Domestic, if they fulfill the conditions, that's it. But every Indian company is by default domestic, so don't go into the detail of that. Till last year what was happening, that dividend was not taxable in the hands of shareholders. Till last year, as a shareholder, if I receive dividend till 10 lakh per year, till 10 lakh per year, dividend income was not taxable in my hands as a shareholder. Till 10 lakh per year, if I receive a dividend from a domestic company, it was totally tax free in my hands. Till 10 lakh per year, it was exempt in my hands under section 10 clause 24. Over and above 10 lakh was taxable. Over and above 10 lakh was taxable. Was, I'm using the language of was, past tense, not applicable now. Was taxable at a flat rate of 10% under section 115 BBDA. Company, domestic company, okay, I'm using the word domestic company, which was declaring dividend, whatever amount, 10 rupees or 10,000 crore rupees, doesn't matter, whatever amount they were paying corporate dividend tax at the rate of 15 divided by 85 into 100 into 12 into 4, 20.555%, 20.555% under section 1150. These were the provisions till last year. In case dividend was received till last year, in case dividend was received from a domestic company by a shareholder till 10 lakh per year, it was tax free under section 1034 in the hands of shareholder. 10 clause 24 in the hands of shareholder. Till last year, if I received as a shareholder more than 10 lakh rupees, you can say it is above 10 lakh per year, above 10 lakh rupees as dividend, I was supposed to pay, it was my duty to pay 10% tax under section 15 BBTA. Domestic companies have nothing to do with the treatment of shareholder. They had to pay corporate dividend tax on the amount of dividend declared under section 150 at the rate of 20.555, and dividend received by a shareholder from a non-domestic was taxable in his hands. If shareholder received any dividend from non-domestic company, then it was taxable in his hands, even if 100 rupees. Taxable. Such non-domestic companies were not under any obligation to pay corporate dividend tax. No. But from this year, every such provision is removed. It has become very simple now, and the simplicity is no corporate dividend tax and flat. As a shareholder, whether you receive something from a domestic company, non-domestic company, does not matter. Dividend, even if 10 rupees is taxable in the hands of shareholder, that's it. So it has become very, very easy. With effect from assessment year 1 to 2021-22, dividend received by a shareholder, whether from a domestic company, non-domestic company, is fully taxable in his or her hands. That's it. This is what the point of dividend is. If it is clear, please raise your hands. Next point. So these are some special incomes which are common. Winning from lottery is also special. So I'm not discussing all the special incomes, some special incomes. winning from lotteries, crossword puzzles, card game. These are some casual incomes where some type of betting is always involved. ये तो जुआ है बस, किसी को हार है किसी को जीत है, that's it. So these are some, you cannot say that these are some regular business activities. Even if you are regular into such type of things, still that income is other source. So section 115, you are not supposed to learn any section. I simply write it so that you remember that what we are doing. Otherwise, you are not supposed to learn. This income is taxable at a flat rate of 30%. That you already know. Taxable at flat rate of 30%. But tax rate is different and TDS is different. So what is the TDS on lottery? Oblique card game, oblique crossword puzzle, whatever, betting nature income. TDS is coincidentally also 30%, though it never happens in every situation. If it is not winning from lottery, only in winning from casual incomes, winning through casual incomes, betting income, whatever is the normal tax rate for me, 30%, the same is TDS. Like you are winning something from this Kaun Banega Crorepati, if you are winning something, you are covered under 115BB where you have to pay 30% tax. And what they are showing, what the person, Mr. Amitabh Bachchan transfers the amount, that is not exactly the amount which will be in reality received by the contestant. If someone has won rupees 10 lakh rupees in KBC, in news on screen, Mr. Bachchan can show that 10 lakh has been credited in your bank account, but in reality 10 lakh will never be credited. That will be after deducting TDS at the rate of 31.4% minimum, because this will be cess 31.24%, 30 into 4%, 31.2. So never 10 lakh is credited. That is only on screen, because every person in India is not at all aware about the tax provisions. In reality, that recipient will receive 7 lakh. Though his income will be 10 lakh. When he will show income from other sources, he will write 10 lakh. He will show other salary, house property, etc., etc. He will compute tax. And finally, when the turn comes to pay the tax, then he will say that I have already paid TDS of 3 lakh rupees. That's it. So coincidentally, income tax rate is also 30% and TDS is also 30%. This is my second special income. So many times, what you will find in question is winning from lottery net. Winning from lottery net. What do you mean by this winning from lottery net? Suppose it is written 10 lakh. If it is written if it is written net, in case of lottery, it is nothing but after TDS. That's it. Don't assume this net as after expenditure. If you remember capital gain, we were saying that gross sale minus expense on sale, that is my net sale. That happens in case of capital gain, but it is not true in case of lottery. Don't say that if lottery net is given, it is gross minus expenditure. No, if it is net, it is after TDS. Do remember this point. So what you have to do, you have to convert it. Can you tell me how will you convert it? It is after 30%. So 10 lakh is the value of 70%. In reality, your income is not 10 lakh. Your income is much more than 10 lakh. Your income is 14 lakh. This you will show as your income 571, and from this 30% tax is deducted and you receive 10 lakh. So you will write TDS as 428571. But don't forget to write income as 14,28,571. Please raise your hand if this point is also clear.
Excuse me, sir.
Yes.
Sir, on previous slide, you discussed about dividend taxable in hands of shareholders. So what was the rate of, taxability?
नॉर्मल टैक्स है उस पे, हर इनकम पे स्पेशल टैक्स थोड़ा ना होता है. You simply include it in your slab, and whatever is your total income, on that basis it will be taxed.
Okay, sir, got it. Thank you.
There are very few incomes for your level which are specially taxed. Only 5: lottery, LTCG, LTCG 111A, STCG, sorry, LTCG 112A, and STCG 111A, unexplained income. That's it. Others are normally taxed. Simply included as your income, as a part of total income. Third, special income. So I've covered dividend and what after dividend, lottery. Now third income. Interest on securities. You must, in accountancy, you must have listened the word X interest, cum interest. In accountancy, in accounts, you must have listened these words X interest, cum interest. What is basically that? Securities. In case of securities, interest is fixed. That means date of payment of interest is fixed. Interest is paid or payable at fixed date. At a fixed date. For example, you have purchased debentures, 10% debentures of Reliance Industries, RIL. The investment is 1 lakh. So Reliance must have said earlier that we pay interest per year on 1st July every year, fixed, that's it. So they will say that on 1st July every year, whosoever is the owner in our records will get 10,000 rupees. Whosoever is the owner in our records, he will pay, he will get 10,000 rupees, because 10% into 1 lakh is 10,000. What problem comes? Now this is my year, April 2021, sorry, April 20 till March 21. Okay, this is 1st April 20. I know that on 1st July, whosoever is the owner will earn 10,000 rupees. Now what happened just 2 months before, for example, 1st May. On 1st May, before 1st May, that means till 30th April, these debentures were held by Mr. X till 30th April. On 1st May, these debentures were sold by Mr. X to Mr. Y. Can you tell me on 1st July 20 who will get the interest of 10,000?
Mr. Y.
Mr. Y will get the interest of 10,000 rupees. So he will include this interest as income from other sources. But in reality, can you tell me what wrong thing is been going on here? What wrong thing is going on? What is not logical?
Mr. X should get the interest for which he is holding the bond.
For how many months he is holding the bonds? 10 months, that means?
Yes, sir.
Okay. Mr. X held these bonds starting from 1st July 2019 till 30th April 2020. July, August, September, October, November, December, Jan, Feb, March, April. For 10 months he held the bonds. So logically, how much interest logically should belong to X? 10,000 divided by 12 into 10. Logically, 8333 interest X should have received, and X should have included it in his income from other sources, and logically Y should have included logically, I'm talking about logic. Y should have included 1667 as his income from other sources. Is it clear or not? If yes, please raise your hand if the point is clear. This should have happened logically, though of course it is not happening right now, but it should have happened. This is the idealistic framework, that this is how X and Y should have been taxed. But Reliance says that we are not at all concerned about who, when someone has purchased, when someone has sold, because these securities can be sold hundred of times in a year. Today I am the owner, tomorrow X can be the owner, next day after tomorrow Y can be the owner, after 1 month P can be the owner. A company is not at all in a position to trace all these people who are the owner. Sometimes ownership transfer also takes the time. I might have purchased something, but ownership transferring takes time. So what they have said, that we are not at all concerned who is the owner or not. Whosoever is the owner in our records on this date, that person will get the interest. So do you know in reality what happens? X will say that X would have already said that to Y, that you give me 8,333 also, along with the investment you give me this amount also. X will say this to Y, that you please give me 8,333 also, because after 2 months you will receive not only your 2 months interest but my 10 months interest also. So X will already collect this amount from Y. When X will purchase, X will sell these shares to Y. So this is what happens in reality. So here income tax department is also not losing anything. The only thing which income tax department, or there are some changes which are going on with the income tax department, is that income tax department is collecting the tax on 10,000, entire 10,000, tax on entire 10,000 from Y. In reality, however, they should have collected the tax on 8,333 from X and on 1,667 from Y. That's it. This is the only thing which is not going on correctly here. Tax department also doesn't want to go into the complexities. They are saying that it does not matter who pay the tax. In reality, there is no income which is going untaxed. The only thing is now 10,000 income of 10,000 is directly taxed in the hands of Y. That's it. So in reality, no one is losing anything. Neither Reliance is in a problem, because they are not. They will simply check who is the owner of these debentures on 1st July 2020. That person will get the interest of entire year. Tax department is also not losing anything, because whosoever is the owner on this date will include the entire interest of 1 year. And in reality, X and Y are not losing anything, because X is collecting 8,333 from Y at the time of selling these securities to Y on 1st May 2020. What I wanted to tell you is that in case of securities, don't compute the interest only of 3 months, first 3 months. That's it. Don't think that your year starts from 1st April 20 and on 1st July interest is paid, so you will include the interest in your year of only 3 months and 9 months interest in last year. No, don't do this. Under Income Tax Act, this is the simple provision that in case of securities, what the year in which that due date lies, on that date in that year, entire interest is taxable. That's it. This is what the purpose of telling you the interest income, interest on securities. Simply see again, X has 10% debentures of Y Limited. Investment is 20 lakh rupees. And this interest is payable twice, 1st December every year and 1st July. So that means 6 months. X, in the same example, he sold rupees 5 lakh of this debenture on 30th September 2020. That's it. Now, can you help me in computing the income of X from this source? compute the income from other source of X. Now let us start computing the income of other source of X. Now one thing is sure that two dates are there, 1st December and 1st July. So if my previous year is 2021, then this is 1st July 2020 and this is 1st December 2020. This is 20. This is starting of the year 1st April 20 and this is ending of the year 31st March 21. Now on this date, can you tell me I will get the what is my interest income on this date? 20 lakh into 10% into what? Can you tell me into what? Into 3 months or into 6 by 12?
6 months.
Into 6 by 12 or only for these 3 months?
Sir, for 6 months.
6 months. Because on 1st July I will get the interest of Jan, Feb, March, April, May, June. I will not say that Jan, Feb, March is not in my years. No, in case of security on due date, you compute the interest of entire period. Similarly, on 1st December, what is my interest income? On 1st December, how much is my interest income? On 15 lakh rupees, because on 30th September I sold 5 lakh investment. So now I am the owner of only 15 lakh into 10% into July, August, September, October, November, December, 6 by 12. So the total income is 1 lakh 75,000. So X will show income from other source 1 lakh 75,000 rupees. That's it. Please raise your hand if the point is clear.
Sir, just a quick question.
Hmm.
So, you also tax income when it's accrued. So, isn't the 3-month period, 3-month interest accruing in the previous year? The previous year 2019-20.
सिक्योरिटी के केस में ये कंसेप्ट एप्लीकेबल ही नहीं होता. इतनी देर से वही तो समझा रहा हूँ ना. In case of securities, it is simple that whatever is the due date, on that due date you have to tax the entire interest. That's it.
All right, sir.
Okay. So next point. What is TDS on interest? What is TDS on interest? TDS on two types of interest. Interest on securities, which I have just discussed, or interest other than interest on securities, like interest on saving bank account, interest on fixed deposit account. It is other than interest on securities. Okay, so this interest on security and interest other than interest on security. So what is other than security interest? If I have saving account balance, I might be earning some interest income. That is my interest other than interest on security. Now in both these cases, some conditions are also there, that who is the recipient. TDS is always not flat. It comes with conditions, in which case TDS is applicable. Like who is the recipient, who is the payer, how much per year has been paid, etc, etc, etc. That is not in your course in detail. So what you would simply learn, TDS rate on interest, it is 10%. That's it. So if in the exam you get any point that interest net is 2 lakh, don't forget to convert it into gross and divided by 90 into 100. This will be the income which you will show in your income from other sources. And directly when 10% is given, you will assume that all theory conditions have been satisfied. two. This you will show as your income from other source. So don't forget to convert interest net and gambling net into gross with the help of these TDS rates. So do remember these two TDS rates which can be used in numerical questions. Please raise your hand if the point is clear. Next very important point is gift. Please raise your hand if the discussion which we have done in other sources is clear. Very soon we will wind up the entire topic, other sources. Very soon means it will take around 45 minutes more. Now next point. Gift. This is my fourth IFOS which is relevant. So three what we have discussed is dividend, gambling, interest on security, and now it is gift. Gift not from the employer, because when you receive something from the employer you apply the provisions of salary head. So it is gift other than from employer. Gift received. Other than from an employer. Three types of gifts can be there. Cash gift, gift of immovable property, or movable. Cash is cash. Immovable are of having two categories. Is it totally free? That means without consideration. Or it is not free. It is with consideration. That means I have not given something as free. But this consideration is less than something. This consideration is less than basically this stamp duty value, the minimum value. Suppose the market, in the government record, the value of the property is 2 crore rupees, and I have given this property as gift to my friend at only 1 crore 50 lakh rupees. Indirectly, that 50 lakh is nothing but gift. So if without consideration, that means totally free. Without consideration means zero consideration. Without means zero consideration. So if the stamp duty value is 2 crore, so technically you have collected zero amount. With consideration means you have collected something, but that something is less than the stamp duty. So that I will tell you in detail later on, but there are two cases. Without consideration, with consideration. Same happens in case of movable property. Without consideration, or with consideration. Now in case of movable property, you don't pay stamp duty. So you don't have any stamp duty. So what you say? Now market value. In case of immovable property, I check stamp duty value. That is the most authentic value in the eyes of the government. But in movable property, I check market value, fair market value. So is it totally free or with some consideration? That you need to check. Now when we apply the provisions, we check all cash transactions per year, all cash. Today I have received 100 rupees, tomorrow I will receive 200 rupees. So whatever per year I receive, I do the total. In case of movable property, I'll say, for example, today I have received some jewelry. Tomorrow I will receive some other painting, etc. Whatever. All do total per year. Similarly, do total per year. These are 5 categories. Category 1. These are 5 categories basically. This is how you tax this. This is one category. This is another category. This is third category. This is fourth category. This is 5 categories. So technically there are 5 different provisions of gift. What I am saying right now is that whatever cash you receive, never check individual transaction. Club all cash received per year. Whatever movable property you received without consideration, club all movable properties without consideration. If, movable with consideration, club all those, club, and then you take a decision. But in case of immovable property, there is no need to club. Taxability will be checked with respect to single transaction. If I have received 4 immovable properties per year in 1 year as gift, then for all these 4 categories, I will apply the provisions separately. That is why I will now write that it is single transaction. In case of immovable property, I do not club all immovable properties. I check the concept with respect to single transaction. So 5 types of gifts: cash, immovable without, immovable with, movable without, movable with. 5 categories. Except immovable property, whether it is without or with, in all other 3 different categories of gift, you have to club all these 3 categories. If I say club, don't club category 1, 4 and 5. It doesn't mean that you will club 1 and 1, 4. Within this category, suppose 7 gifts, club these 7. Within movable, suppose 4 movable, club these movable. Within movable with consideration 3, club these 3. Categories will remain separate. So all these 5 will always remain separate. Within the categories of cash and movable, whether with or without, club of those. Immovable properties, keep every immovable property separate and then take a decision. I will tell you now how to take a decision. But is this categorization of gift clear? If yes, please raise your hands. Any problem you can ask. Next point. Now I will tell you how do I tax the amount. For this you can prepare a small table. It is type of gift. Conditions. What is taxable? And transactions, whether single or all. So first, cash gift. It was my category 1, cash. Condition: if per year aggregate cash is more than 50,000, aggregate amount per year. entire amount is taxable. Not you can, if suppose I receive 60,000, don't say that till 50 is exempt, full amount will become taxable. The moment it exceeds 50,000, entire amount received as cash gift is taxable. Entire amount received is taxable. Entire amount. All transactions, club all these, and then you take a decision. If you receive cash gift of 49,000, it is totally tax free. 51,000, entire 51 is taxable. Category 2, immovable, without consideration, totally free. If the stamp duty value is more than 50,000, whatever is the stamp duty, if that is more than 50,000, then whatever is the stamp duty value is nothing but your income. Single transaction you check. Immovable property with consideration. With, that means you receive something. But if consideration is less than what? Stamp duty value. Not only less than stamp duty value, and this difference between consideration and stamp duty value is more than the higher of following two. It should be more than the higher of following two. Following two figures or values, whatever you say. 50,000. This difference should be more than 50,000 and 10% of consideration. $50 is higher or 10% of actual sale, whichever is higher. Not actual sale, consideration, whatever you have received from the person to whom you are giving the gift. If suppose 50 is higher, then this difference between consideration and stamp duty value should be more than this 50. Then this difference is taxable. With the help of the example, it will become clear. It is a little bit technical right now, but it will become clear when I will discuss with you an example. Difference between stamp duty value and consideration is the taxable amount. Single transaction. It is little bit technical, this, but it will become easy the moment I discuss with you practical. Movable without. Can you yourself tell me the answer movable without consideration logically? You should relate it with movable with immovable without. Can you tell me logically what I should write?
If it's more than,
yes, what more than?
It's taxable.
What more than?
The value of the
fair market value.
Fair market value of the good.
Yes. This FMV is taxable, that's it. All transaction. Now I club. And similarly, in case of this movable with consideration, can you tell me logically what I should write? Again, you should relate it with what? This. What I should write? If consideration is less than what? And this difference between consideration and FMV is more than what? Can you tell me what I will write now? Is more than what? Simply 50,000. That's it. In immovable, only this point is extra. In movable, there is no such point. And why this point is extra? You can relate it with capital gain also. If you remember the provisions of capital gain section 50C, there also what we were saying, that if actual sale value, we were comparing actual sale with stamp duty value. Till extra 10% of actual sale, the variation was allowed to be adjusted because of some situations in real estate. We assume that if actual sale is shown as 2 crore and in the government record it is 2 crore 1 lakh, then 2 crore into 10%, that means till 20 lakh variation is genuine variation. Or take small example, suppose 10 lakh is the value of the house, which I am saying that I have sold the house for 10 lakh. Stamp duty value says that the value is 10 lakh 20,000. 10 lakh is 10 lakh is my sale. Government record said that no, the value is 10 lakh 20. So government says 10% variation is genuine. So what government says, 10 lakh into 10%. So extra becomes 1 lakh. Add it into 10 lakh, 11 lakh. So government says till 11 lakh if stamp duty value exists, so your 10 lakh is genuine. And my stamp duty value is only 10 lakh 20,000. So government says no, then we will not take stamp duty value as your sale. What you are showing as your sale as 10 lakh is genuine. Till 11 lakh stamp duty value in my example, your sale is genuine. But if stamp duty value is more than this 11 lakh, then we sense some doubt. Then we think that something wrong is here. Then you cannot take your actual sale. You have to take stamp duty. I don't know whether you remember this point right now or not, but we have covered it in the chapter capital gain. And on the basis of same logic, this 10% consideration point has been extra added. It doesn't exist in movable. That is the only point which is newly added. That not only you should check the difference more than 50,000, but even if 10% of consideration is also exceeded, that difference also exceeds this 10% of consideration, then only you will say that it is a gift, and then only you will tax this difference between SDV and consideration. Still there can be some doubt. I will start discussing very soon the numericals of this. Now what is the answer? Same answer. Difference between fair market value and consideration. All, that's it. Now the table is complete. And I will give you some examples. But before noting some examples, leave around 10 lines blank. 10 or 12 lines blank. I hope I can move forward. Leave around 10 to 12 lines blank. So leave around 10 to 12 lines blank. And then let us discuss some examples of gift. And you should tell me the answer. I will ask some examples. First example. Naveen received a gift of 55,000, a cash gift of not 55, suppose of 40,000. From his friend on 7th May 2020 and 15,000 from his another friend on 7th December 2020. Can you tell me the answer? What should be taxable value? Answer, nil or what? Any answer?
Sir, taxable amount is 55,000.
Yes. Taxable amount is rupees 55,000. Why? Because in case of cash gift, I do aggregate per year, and since aggregate 55 is more than 50,000, full amount is taxable. That's it. Please raise your hand if the point is clear. This is an example of cash category 1. Okay, this is category 1 example. Let me give you an example of category number 2 or category number 2. Let us discuss category number 2. Rahul received an immovable property, immovable, from his friend on 7th November 2020 without consideration. The stamp duty value of this property is 60,000. Can you tell me what is the taxable value in the hands of Rahul?
60,000.
60,000.
Why?
So the stamp duty value is more than 50,000. If that's the
Yes.
case, we'll simply check that and tax the STV.
Yes. So since this value, note this value, since stamp duty value is more than 50,000, we taxed. Rahul also received another immovable property from his another friend on 8th November 2020 without consideration. Stamp duty value is 10,000. What is the answer?
Sir, in this case, still 60,000.
Why?
So, in the case of immovable property in general, the transactions are checked singularly rather than as a whole aggregate, since
Yeah,
10,000 is not more than
so I
50,000.
will write nil. Okay, I will write nil. Since it is checked individually, my taxable will remain 60, but I have to tell the examiner that for this immovable property, the taxable value is nil. So the total taxable value finally is 60,000 for Rahul. Please raise your hand if the point is clear. Because for immovable, we do not club, we check separately. So this basically was category number 2. Third example. Sanjay received an immovable property from his friend on 27th Feb 2020 for rupees 10 lakh, for rupees 10 lakh, whose stamp duty value is 11,10,000. Now, how do we compute the taxable immovable? For a consideration, so what we check? If consideration less than SDV, yes. How do we check? Here, consideration which is 10 lakh is less than SDV, stamp duty value, yes. But only this condition is not sufficient at the same time. This difference, can you tell me how much is this difference?
1 lakh.
1 lakh 10,000. And this difference 1 lakh 10,000. It should be more than the higher of. So let us check higher of. Higher of what? Till 3 years ago, it was only higher of 50,000. But when this extra benefit in real estate is given, so we got additional condition higher of 50 lakh or 10% of consideration. So 10% of consideration is 1 lakh. That means higher of 50 or 1 lakh. Is this difference higher of 1 lakh? Yes. If yes, then this difference is my income from other source. This is how we check. The difference is the benefit technically. Had I gone to the market to purchase it, minimum I would have paid 11 lakh 10,000, but I got it only at 10 lakh. So government indirectly says it's nothing but 1 lakh 10 is your gift. Whether 1 lakh 10 is taxable or not, then it depends upon these provisions that it should be higher of 50 or 10% of consideration, whichever is higher. So my difference should be more than this, whichever is higher. Please raise your hand if this example is also clear. I hope that now you will find that technical point easy.
Sir, if there were differences like 60,000,
In
then
this example,
yes, sir.
it would have gone untaxed, tax free, because till 10% extra variation is allowed. Then what government would have said, suppose in this case the difference is 60,000, what government would have said that you paid 10 lakh rupees, then into 10%, 10 lakh into 10% means 11 lakh. So government says till 11 lakh rupees, we assume that the property's actual value can be till 11 lakh rupees, and stamp duty value is only how much in this case? कितने इस केस में? 11 lakh 10,000. Wait. What is this difference now? So if you want if you want to make this difference as 60, then this value will not remain 11 lakh 10. Then what you have to do? Either you have to increase the sale, or you have to remove or you have to reduce the SDV. So if you want to assume that sale remains 10 lakh and stamp duty value 10 lakh 60. So now you will say difference. Yes, difference is genuine 60. Is it more than higher of what? Again, two things. Yeah, it is more than 50, but is it more than 1 lakh also? Answer is no. Then government says this 60 is technically not your gift, because extra 10% variation we are assuming that it is genuine. So until and unless the receiving is more than higher of these two amounts, the difference is not treated in the eyes of the act as a gift. Point clear or not?
So, sir, there should be written as and in between 50,000 and 1 lakh. in upper example, sir. There is or
50 और 1 लाख क्यों होगा भाई? हायर है ना, इन दोनों में से हायर क्या है आपके पास? व्हाट इज हायर? 50 हायर ऑफ दिस एंड दिस तो कोई लैंग्वेज बनेगी नहीं. When you are giving option, ये तो कंपल्शन नहीं है ना, 50 and 1 हायर ऑफ दिस और दिस.
सर बात तो वही पड़ी, हायर देन बोथ बोलो या तो हायर ऑफ दिस बोलो. मतलब अगर मैं कह रही हूँ कि दिस डिफरेंस शुड बी हायर देन बोथ as 50,000 and 10%, it still means the same.
sir, if we are saying that higher of 50,000 or higher of 1 lakh, then it means, sir, simply that one condition should be satisfied, either 50,000 or 1 lakh.
अच्छा, हाँ उस सेंस में कंफ्यूजन हो सकता है. एक मिनट रुको. हाँ ठीक है रोयर, उस सेंस में कंफ्यूजन हो सकता है, तो आई शुड यूज एंड. यस, यू और नहीं इसमें, या अगर हम और कहते हैं तो उसमें कंफ्यूजन हो सकता है. सो एंड इज एप्रोप्रिएट. मैं देखता हूँ उसमें बुक में मैंने क्या लिखा है, और लिखा है क्या? नहीं, एंड है बुक में, मैंने एंड ही लिखा है. वो शायद अभी डिस्कशन करते वक्त और वर्ड यूज हो गया. बट यस, इट शुड बी एंड. या एंड इज लॉजिकल, बुक में करेक्ट है, but for the at the time of explaining, yeah, I wrote or. So or becomes wrong technically, so I should use and is more appropriate. Yeah, that is correct. And please raise your hand if this point is clear. This point means not this or and, the main point is this third example. Next example, so I have discussed with you three cases, and fourth and fifth, and then gift is also over. Gift is the technical point. After this, not much will be left in this topic. Then it will be very easy. We will wind up soon then. Fourth example. Komal received a movable property, a painting for example, from her childhood friend Rashmi without consideration on 30th March 2021. The fair market value. Now how you arrive, how you get this FMV, that is beyond the level of semester 3, so that I'm not discussing that. How do we get fair market value? In the act, in the rules, there are provisions that how do you get this FMV. So this FMV is 50,200. What is the taxable value? 50,200. Why? Because FMV is more than 50,000. It is my category 4 example. Please raise your hand if this point is also clear. Next example. Sparsh received a painting from his friend, but not free, from his friend on 28th Feb 2000. The date matters because the moment this date changes, it's possible that year also change. 28th Feb 2021, 4 rupees 10 lakh. The fair market value of this property is 10 lakh 45,000. What is the taxable value? Is consideration. First of all, if consideration is more than FMV, then it is not at all a gift. In fact, the government says that you are already at a loss. So technically there is no income. But as the market value, you have in reality paid more than the market value. So that's not an income for you. So always we must make sure that consideration is less. So consideration is less than FMV, yes. But by what amount? What is the difference? Only 45. Since it does not exceed 50,000, so the taxable value is how much? How much?
Okay.
Nil.
Nil.
So technically till 50,000 exemption is allowed as far as gifts are concerned. That's it. Please raise. I have discussed all the examples of for all the categories. Now, if this point is clear, please raise your hand. Next point. But do you know in some cases gift is totally tax free, even if 100 crores rupees, even if 10,000 crore rupees, no tax. So ignore 50,000 cases where gift is. So the point where or when I told you that you please leave 10 to 12 lines blank, this is the point which I wanted to cover. Cases where above provisions of gift are not applicable. If I say not applicable, that means no tax on gift. Which provision? These 5. Whether category 1, category 2, category 3, category 4, category 5. You don't. There is no need to check any of these provisions. Even if you are receiving immovable property without consideration and the stamp duty value is 50 crore rupees, still it is tax free. Which are those cases? First, at the time of marriage, if you receive anything, tax free. At the time of marriage, tax free. Then by way of will or inheritance. So only relevant ones I will explain. Otherwise, this list is also very lengthy. By way of will, inheritance, tax free, no tax. From relative, if you are receiving something from relative, if you remember in my all examples I used friend. From relative, if you are receiving tax free. So suppose the recipient is X. Suppose Mr. X is receiving a gift. Then who are relatives? Who are relatives? Spouse of Mr. X is relative. Spouse of Mr. X is relative. So if wife of Mr. X gives any gift to Mr. X, irrespective of the amount, no tax. Who are relatives? Brothers and sisters of Mr. X. Mr. X, no tax. Who are relatives? Brothers and sisters of spouse of Mr. X. That means Mrs. X. Brothers and sister of Mrs. X. Relative. Brothers and sisters of parents of Mr. X. Brothers and sisters of parents of Mr. X. No tax. any linear ascendant or descendant of Mr. X. That means ascendant or descendant of Mr. X. Son, grandson, father, grandfather, tax free. Any linear ascendant or descendant of Mr. X. And in all the cases, wherever their spouse is also, no tax. Suppose if brother of Mr. X gives any gift, suppose if my elder brother gives me any gift, it is tax free in my hands. So if my brother's wife also gives me any gift, it is tax free. If my sister gives me any gift, it is tax free. Then my sister's husband, if gives me any gift, tax free. So the definition of relative for the purpose of receiving gift is very wide and it almost covers all the close relations. This is my third point where it is tax free. So do remember, when you tax income from other sources, make sure that it is not covered in the exempted category. From any university. So this might be relevant. Gift received from any university. Oblique other educational institution, tax free. And then from a charitable trust, I'm telling only relevant points. From a charitable trust, tax free. These are sufficient for your level. With this, the concept of this is over, gift. Then now we are starting with section 57. Section 56 is over. Please raise your hand if these points are clear.
Excuse me, sir.
Yes, yes.
I just wanted to confirm that what about in point number 3? What about father-in-law of Mr. X?
नहीं, taxable है. Parents and brothers of only recipient is covered, not parents and parents of recipient is covered. Parents of spouse of the recipient is not covered.
Okay, sir. Thank you.
Now with this we wind up. We have completed section 56. Now section 57, which expenses are allowed to be deducted. Very small list of those expenses. Next point. Section 57. This is my main second heading. Section 57. Which expenses which are allowed as deduction. While computing income from other sources. When I compute the income, which expenses I can debit? So only small explanation, only relevant points I will tell. Only relevant ones, others you can skip. Main point is this: revenue expenditure. Incurred to earn the income which is taxable under the head IFOS. is allowed as deduction. That means whatever income you are earning, to earn the income, whatever revenue expenditure you have done, that is genuine. Suppose you are earning 100 rupees as income, and to earn the 100 rupees, 20 is the normal fare, normal rickshaw charges, whatever revenue expenditure. So you are not going to tax on, you are not going to pay tax on 100 rupees. Logically, only income is taxed, not the gross receipt. So you have a right from your gross receipt to deduct revenue expenditure which is necessary to earn the income on which you are going to pay the tax. This is a common point which can be applied for entire income from other source. And two special points which can be used. Family pension. Deduction in respect of income from family pension. Family pension is normally received by the family members when the employee because of which the pension is being given dies. When someone after the death, in so many cases, less amount of pension is given to the family members. That is known as family pension. So the person who received the family pension will show that income as income from other sources. Deduction in respect of income from family pension. In the exam, always it is given by the name family pension. Only then you can easily check that it is family pension or not. Whatever family pension someone receives, 15,000 flat or 1/3 of pension, 1/3 of such family pension is allowed as deduction. Oh, sorry, whichever is lower. And last is interest on compensation. 50% is flat allowed as deduction. Interest on compensation or interest on enhanced compensation. %50 of the interest is allowed as deduction flat. That's it. This is what my entire section 57, which is relevant for you. Please raise your hand if the point is clear. 58. Section 58 now. Third main heading. Section 58. Expenses which are not allowed as deduction. Specifically, these are disallowed. Which are not allowed as deduction. Only relevant ones are personal expenses. Any expenditure which is personal nature, that is not allowed as deduction. So I'm telling you only relevant ones. Only relevant ones. Payment exceeding 10,000, not through accounting banking channel. Payment exceeding 10,000 made other than banking channel is not allowed then. That means cash is disallowed. The intention of government is to make sure that all transactions are come in audit trail, because cash basically helps in creation of black economy or black money. So the intention of the government is to bring all the cash transactions in the records basically. And the main relevant point is no deduction of any expense from casual income, that is flat taxable, like lottery, gambling, etc. Suppose I purchased a ticket of 10 rupees and I earned a lottery of 100 rupees. From that 100, I cannot even deduct that 10 rupee lottery ticket. If you take the plea of section 57, you can say that you could have easily argued that why not expenditure incurred to earn the lottery is allowed. But section 58 supersedes this 57 and it says that from lottery income nothing is allowed. Even their own expenses which you have incurred to earn that lottery income is also not allowed. So if I say lottery, don't treat it as lottery only. My intention is basically whenever I use the word lottery or gambling, my intention is to cover the betting nature incomes. No deduction, the incomes are flat taxable. I hope the point is clear. Now, last or just two small headings. Some interest income is totally tax-free. Interest income exempt from tax. The moment I use the word exempt, you must have one thing in your mind that I must be talking something about section 10 then. Section 10 clause 15. In this section, there are some interest incomes which are totally tax-free, no tax. And the most common is interest income from post office saving account. Can you tell me the amount post? We must have used it in numerical. Interest income from post office saving account. Can you tell me how much is
So
exempt?
3,500
No,
and
3,500 in case of single account. And 7,000 in case of joint account. I'm telling you some examples, you can write it because section 10-15 will become typical for you to read. So you only note down some examples, which I will tell you now. Interest on gold deposit bonds, interest on gold certificates, only relevant ones I'm telling. Interest on deposit certificates. Issued under the gold monetization scheme. (2015). What are interest to get on this gold monetization scheme deposit certificate that is tax free? Only relevant ones you should learn. For numerical purpose, only this A point is relevant, but I'm covering it from theory perspective. Suppose if any theory question comes in 5 to 6 marks, you can write some examples. Interest on specified relief bonds. Specified means some selected. You're not supposed to learn those selected. This much is sufficient. Relief bonds. Some deposits are also there. Interest on notified deposits. So again, I use the word notified. You're not supposed to learn which are those, but some notified deposits On that, interest is tax free. That much is sufficient for this category 4. And last is method of accounting. And this I have already covered in PGBP. I have told you already that there are two heads, PGBP and income from other source. In these two heads, it's my choice. I can follow cash basis of accounting or mercantile basis. If I follow cash basis, I record the income when it is received and I record the expenses when these are paid. I record the income when these are accrued. I record the expense when these are paid. That's it. This is the end of IFOS. Any doubt related to IFOS only if you have, otherwise you raise your hands. Okay, that's all for today. And tomorrow I will ask the timings from you, and tomorrow I will wind up the topic of return of income. That's all for today. Goodbye.